Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about the entire cryptocurrency market capitalization and talk about what is the worst case scenario for a macro or potential market cycle bottom. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out Into the Cryptoverse Premium at intothecryptoverse.com. We've had a lot of people ask if we can do a sale there again, so we are starting a sale yet again. If you guys want to sign up, you can find it at intothecryptoverse.com. You'll get access to the weekly report that we put out. We put out 3 weekly premium videos. We also have a website with social statistics, which I think are really great for identifying the bear market or maybe even the end of the bear market at some point. We have on-chain metrics. We have ROI charts, logarithmic regression stuff, risk levels, etc. So make sure you check it out and lock in the lower rate. Let's go ahead and jump in. So when I talk about what is a potential macro bottom for the entire asset class, remember we're talking about what I would consider to be the worst case scenario. Now, trying to figure out what a worst case scenario would be to try to identify what prior generations of investors have experienced with very similar bubbles. Back in February, when we had the Super Bowl, if you remember, it was nicknamed the Crypto Bowl. And one of the reasons it was nicknamed the Crypto Bowl is because there were all sorts of cryptocurrency ads all throughout the entire thing. Now, the natural inclination might be to just think that that's a good thing and that should ultimately bring in a lot more people into the space. And I think it does, but it doesn't necessarily get us out of the bear market that we are currently in. One of the things about bull markets is that a lot of people just chase trends and a lot of new projects pop up that are simply chasing trends rather than actually innovating. And then bear markets force you to actually innovate. So there's only so far that marketing can take all these different projects before they're forced to innovate and actually create real world utility that's going to bring in people and have them stay. So one of the things we can do is remember what it was like during the last time we experienced something like this. You might think I'm talking about 2018. We are going to talk about that a little bit later, but that's not what I'm talking about. With regards to the crypto bull, we talked about it in comparison to the dot-com bull. Back in the year 2000, there was something called the dot-com bull because we had dot-com commercials during the Super Bowl, and it was basically overtaken by dot-com commercials. And during that time, we were basically starting a fairly brutal bear market for these assets back then. And I want to go look to see how far they dropped. Try to identify, does it make sense if crypto drops just the same amount? Look at some Confluence and then talk about where that would ultimately put things like the price of Bitcoin. So let's go ahead and jump in. So on specifically this thing. So the thing is if you look at what happened with the Nasdaq back in the year 2000, you can see that it actually corrected about 83%. This is an 83% correction. Now, for people who don't like the idea of crypto correcting 80% or they don't think that it can happen, I assure you it can happen. And it seems to happen every few years. You'll see an 80% correction. So let's first not assume that it can't happen, considering that it's already happened in the cryptocurrency asset class multiple times, in fact, right? Multiple times. So the NASDAQ crashed 83% before ultimately finding a macro bottom and then going on another run. And then we had the financial crisis, of course, which led us to another bottom. It was still higher than this one. And then you can see what came after it. Now, remember, during the dot-com crash, there were still several bounces in between that made it seem like it was a bottom, but it actually, in fact, was not. We can see there's plenty of 40 and 50% bounces all throughout here. So if you're a long-term trader and then you get sucked into trading short-term moves, you might find yourself selling bottoms and buying tops, only to sell that again back at the bottom and then to buy it back at the top and then to sell it again at the bottom. And then maybe this time you don't buy it because you learned your lesson and then it just keeps going up. Okay, so don't be that guy because it's easy to turn into that guy. All right, don't be that guy. So what does that mean? Where would that put the entire cryptocurrency asset class if we were to follow along? Well, one thing to consider about the dot-com bubble, and we actually talked about this in the video, I believe there's an article here that we pulled up, the $1.7 trillion dot-com lesson. This was done in November of 2000, but in November of 2000, we were not through the entire bear market yet, right? Like November of 2000 was right here. Okay, it's not like we had really fallen all the way down yet. And so in that article, which I'll just pull up here, you can see the combined market value of the 280 stocks that were basically, a majority of these internet.com stocks or whatever. They reached a peak of a market cap of 2.948 trillion. So approximately $3 trillion at their peak. The reason why that's interesting is because if you go look at the entire asset class, on the peak, the high was approximately 3 trillion. So you're almost watching history repeat itself to the T. Now, the one counterpoint is to say, well, there's a lot more money today, so why should we assume that, peaks will be the same and valleys will be the same? We shouldn't, right? We shouldn't necessarily assume that, but we're just talking about a worst case scenario based on something that we've literally see play out in the past. Okay. Now, again, I was 10 years old when the dot-com crash happened, so I didn't really live through it in the sense that I experienced the emotions behind it. I was pretty much oblivious to all of that stuff, but it doesn't mean we can't learn the lessons today. So where would that put crypto? Remember, the NASDAQ dropped 83% from the top, 83%, and it dropped from around 3 trillion down. If you go all the way down to the bottom, you can see that it was about an 83 to 84% drop. Now, where would that put the entire asset class? So if you go look at the entire asset class for crypto and you take a measured move from the top, and let's suppose we go down 83%, that would put the asset class at around a $500 billion market capitalization. 500 billion. Now, I struggle to, honestly, sometimes I struggle to comprehend an asset class that's only a market cap of 500 billion, but considering that the asset class as a whole was 3 trillion not that long ago, and we're currently at 1.26 trillion, it's not that far-fetched to assume that we can't drop another 40% or so down to approximately 500 billion. I would consider that to be the absolute worst case scenario. Now, you might say it's pretty weak to think about it as a worst case scenario if all I'm going to do is compare it to the dot-com bubble. I think it's maybe more realistic to assume that the bottom, if we're going to continue this bear market for even 3 to 6 more months, would probably come closer to 6 or 700 billion. But I want to show you a few different areas of Confluence so that you can see that it's not just based on what the NASDAQ did back then. One of the things you also have to remember during a bear market is that it's easy to get stuck in the buy the dip mentality. And a lot of people will sort of parrot buy the altcoin dip, buy the altcoin dip. You don't know what cheap altcoins are if you joined crypto in 2021. Remember, you can't buy the dip if you already bought the dip 10 times before. You're just simply out of cash. So buying the dip doesn't really make a whole lot of sense if you don't have the patience to just have a cash position and come in once you actually see the real dip. Remember, as we showed in the NASDAQ, you can get multiple 30, 40% moves back up to the upside before ultimately the bottom is found. Okay, so remember that. There's no reason Bitcoin can't go back up even to 35K potentially, maybe even 40K, right? Maybe even 40K. But it doesn't mean that the bear market is necessarily over, okay? So when we talk about this, I also want to talk about these areas of confluence, okay? So there's, of course, the fact that the NASDAQ has dropped about 83% back during the dot-com bubble. There's the fact that if we go look at crypto and go down 80-something percent, it puts us at around 500 billion. If we go down, let's say, 80%, it's actually at around 600 billion, which means that the asset class could drop another 40 to 50% or so. Now, are there any areas of confluence? If you go look at the total cryptocurrency market capitalization, logarithmic regression, fair value fit to all data, but you look at the lower bound, green band, you can see that it is currently at 500 billion. So I look at this and I say, it is possible. It is possible for us to go to that level. We didn't go to the upper band, so perhaps we won't go to the lower band, but we always have to admit that if it's in this band, it should be considered a possibility because this band has done a really good job so far of showing all of the possibilities that could arise during mania phases and bear market bottoms. So currently the bottom on this is 500 billion. By the end of the year, if we scroll this out to the end of the year, it'll be closer to approximately 700 billion. So I think it sort of depends on how long it takes us to actually find that market cycle bottom as to how low we'll ultimately go. The longer it takes, perhaps we won't go quite as low, but we have to respect the fact that the lower bound here could probably be, my guess is probably somewhere between 500 to 700 billion for a worst case scenario for a macro cycle bottom for the entire asset class. Okay, and this would be considered, um, this would be considered a market cycle bottom before starting a major new bull run. As of today, the entire asset class is undervalued by about 27%. But if you look at the difference between the fair value and the actual asset class, you can see that based on what we've seen previously, we could easily go down further. While today we might only be undervalued by 20 something percent, before we've gone undervalued by up to 60% or more. So don't this in March of 2020 we went undervalued by about 70%. So that it could certainly play out again where we see something like that, and maybe we'll have something that looks like a W here, where we come back down and spend some time and then go back up on some type of massive bull run, which is exactly what the NASDAQ did after this major correction. So if you look at this major correction that the NASDAQ had, it dropped 83%. But then it basically went on a massive bull run that a lot of people made a lot of money on. So we did have the financial crisis in 2008, but you can still see this was a crazy bull run that the tech stocks ultimately went on. It's just that we had to wipe out all of the garbage in the space before we could really, cleanse it and ultimately move higher. So, given the fact that the Nasdaq dropped 84%, you might wonder, why did it drop so much? The problem is that there were a lot of companies that were just simply overvalued, and they were only bought because of all of the hype. Okay? You might say, well, this time is different. Is it really? Is it really? Think about all of the altcoin projects that were bought simply because someone shilled them to you on Reddit. Think about some of the cryptocurrencies you might hold that you honestly don't know what they do other than tell you the price is going to go up, right? I think right now there's too much money in the space and not enough innovation. The thing is bear markets require innovation in order to ultimately bring new money into the space. You have to innovate to bring investors. But in a bull market, people are just chasing trends, so it does not require innovation. The people that innovate during the bear market ultimately experience the nice part of the bull market. But during the bull market, you have trend chasers who will create copycat projects that are basically just copied source code from other projects in order to ride the wave. So they're no longer innovating, they're just copying what other people have done. There's only so much marketing that you can do, let's say with the crypto bull, before you actually are forced to innovate again before the asset class can sustainably move higher. That's what we saw happen in the dot-com bubble. We did not actually ultimately move higher until we washed out all the garbage from the space and then ultimately found some, had some time to innovate before we ultimately ended up moving higher. So I do think it's important to consider that the asset class as a whole for crypto, I think it's a really good asset class. I do think it will ultimately trend much higher, but we are in the process of a bear market right now. We're in the process of cleansing the space. We're in the process of just getting all of the garbage out so that we can ultimately move higher in a more sustainable way. So when we talk about potentially dropping down to a market capitalization of the entire asset class between, say, 500 to 700 billion, is it possible? We saw it happen with the NASDAQ before, so I don't know why we would assume it can't happen with crypto, considering there are a lot of similarities. Remember, we talked about this in this video on February 13th. If you want to go watch it, you can. I go into a little bit more detail, but it was called The Crypto Bull, Understanding the Risks with Cryptocurrency. The reason we made it was because we were already in a bear market, and I saw that a lot of people were coming into the space because of all the commercials, but the important thing to remember is that until we start to innovate again in the space, you're not really going to see a sustained move higher. So we are in a bear market, unfortunately. Whatever comes next will be a new cycle, but it could be more impressive than the one we actually just saw. If just go look at what the Nasdaq did, right? Look at the Nasdaq here. Look at what it did, and then look what came after it, right? We had a nice parabolic rally, but then we ultimately had another great parabolic rally that lasted about just as long as the first one. And this thing took over 10 years. So you could still have another 10 years coming for crypto to go absolutely crazy and for us to, find a lot of reasons to be excited about it and to jump on various projects that are innovating. But right now we are in fact in a bear market. And again, I want to talk about a few other things of Confluence, but before I do, I just want to remind you that bear markets have a way of simply washing you out. Okay, so for instance, you'll see 40 to 50% moves back up to the upside, but it doesn't necessarily mean that the bear market is over, right? It doesn't mean that the bear market is over, and that's what causes people to get sucked back in. You end up selling the bottom, buying the top, selling the bottom, buying the top. Just don't try not to be that person and have a long-term strategy here. Now, we talked about the entire asset class as a whole. I also wanted to talk about one other thing here, and that's if you go look at the running 1-year ROI for the entire asset class, assuming I can find it. So here's the running ROI of Bitcoin. And what you'll notice is the 1-year ROI tends to bottom all the way down here, right? It tends to bottom all the way down here. Sometimes it goes below 20%, sometimes it goes above, and it usually happens about 1 year after a major top, okay? So right now, the 1-year ROI is currently 0.570. So what would it take us? Let's figure out what would it take us to get to 0.3 and what would it take us to get to 0.2. Okay, let's go take a look at that for Bitcoin. Okay, and that has historically been major bottoms, right? So if you go look at Bitcoin and we figure out what would it take for us to get down to 0.3 from the top, to go down 70%, it would put Bitcoin at approximately $20,000. So I do think you need to understand that a $20,000 Bitcoin is certainly possible, considering that it would be relatively in line with prior market cycle bottoms. And even then, it's actually a bit too optimistic almost, according to major corrections we've seen in the past. If you go down 75%, you're looking at around a $17,000 Bitcoin. And if you go down 80%, you're actually looking at somewhere closer to a $14,000 Bitcoin. So I think that you need to be somewhat open-minded about where this thing could ultimately end up. I do think, unfortunately, that there is a decent probability that we could go sub 20K. Okay. Now, where else is there some confluence with this? Well, one of the things we know with Bitcoin is that ultimately you will see things like market cycle bottoms at the 200-week moving average. Okay. So if the asset class is ultimately going to bottom at the 200-week moving average, that would actually be a relatively optimistic scenario because that means we could find a bottom at $22,000. However, we also know that the asset class has previously gone to the 300-week moving average, so we should at least consider it a possibility. Don't discount anything. Don't discount anything. It's all somewhat arbitrary, right? If you recognize right now that cash is king, it doesn't really matter exactly where the bottom is, as long as you're patient and you look for the signs in, say, broader markets to go back to being risk on, then that's where you really start to scale in. So, but if you look at something like this, the 200 week is at 22K, but the 300 week moving average is at around 1600K. So 22K all the way down to $16,000. Now, a $16,000 Bitcoin would put it down from the all-time high approximately 76%. Now, does that make sense? Well, one thing about diminishing returns is that you also tend to get diminishing losses from cycle peaks. So if you look at the first cycle, we went down about 93 to 94%. The second cycle, we went down about 86%. The third cycle, we ultimately went down about 83 or 84%. So I suppose it's possible that this cycle, we don't go down 83%, which would put us at $12,000. Maybe it won't be quite as bad, and it'll be somewhere between, say, like 70 to 80% down from the prior all-time high, but ultimately putting us, reasonably, we could expect going below sub $20,000. So with all of that in mind, considering the fact that the entire asset class is currently undervalued by 26 to 27%, we know that we could go undervalued by 60 to 70%, which could get us to a lower bound of approximately 500 to 700 billion, which would put us in the same ballpark as where the NASDAQ corrected 83% during the dot-com bubble, which is very similar to the crypto bubble, or the crypto bull, which is a bubble, right? The crypto bull that we experienced most recently. And we talked about this back in February of 2022 and trying to understand the risks of cryptocurrency based on lessons of prior generations. So you couple all of this with the fact that the Bitcoin dominance should go up, and maybe we can also pinpoint another price for Bitcoin based on where the asset class should go. So one of the things we spoke about with regards to Bitcoin is that if you go look at this on the daily time frame and look at, say, things like the 200-day moving average, one of the things we note is that when bear markets get started, you can no longer assume that lower lows are going to be held. That ultimately will ultimately break below. And that's actually what we saw happen. We talked about this with regards to 2018 and how we were putting in a low, a higher low, and then a higher low, and then ultimately it broke after we got rejected from the 200-day. We went in and put in a lower low. It's the same thing that happened here, right? A low, a higher low, a rejection off the 200-day, trying to put in a higher low, but then it failed, and then going in and putting in a lower low. The reason why this is important is because this lower low again occurred in June of 2018. And if you go look at the Bitcoin dominance started its major uptrend in June of 2018. And so the Bitcoin dominance right now, you can see it's finally taking that spike that we've talked about on this channel for months now that was going to happen, right? We said the dominance is likely going to go up whether Bitcoin goes up or down. So what you're likely going to see is while the asset class as a whole might go to somewhere between 500 to 700 billion, I do believe that Bitcoin will make up more than 50% of that market capitalization. I would not be surprised to see Bitcoin go to 60 or maybe even 65 to 70% of the entire asset class. But I do think that a bottom would probably correspond closer to 60%. And if Bitcoin is going to go back up to 70% dominance, then it would likely correspond to the beginning phases of a bull market. And after that happens, then you would see altcoins surge back after Bitcoin has found some confidence and investors are confident once again in the market. Okay, so I do think that it's more likely in the short term that the Bitcoin dominance will actually go up a lot, because that's actually what exactly happened over here when Bitcoin put in a lower low for the first time in the 2018 bear market. Altcoins got wrecked against Bitcoin during this bear market, and then altcoins also got wrecked against Bitcoin during the 2019 bull market. So you could see something like that play out again as well. So if the asset class as a whole goes to say somewhere between 500 to 700 billion, but Bitcoin's making up, let's call it 60% of the entire market capitalization, then perhaps you'll see the market capitalization of Bitcoin bottom somewhere around 300 to 400 billion. Now, the current market capitalization of Bitcoin is only at 559 billion, but that would put us down another 30 to 35% or something like that. And if Bitcoin were to go down, let's call it another 30 to 35% from this level, then you'd be looking at around a sub $20,000 Bitcoin. Okay, so we've shown a lot of areas of confluence and why this could be the worst case scenario for the asset class. The other reasons I think that we need to consider this potential path is that inflation is still not yet under control. It doesn't mean that it's not going to get under control. In fact, the most recent month year over year was down to 8.3%, which is slightly less than last month. The problem is that the Fed can't pivot until the stock market until the inflation starts to come back down. And until the Fed pivots, the stock market's likely not going anywhere. Now remember, every Bitcoin bull run occurred when the NASDAQ was in an uptrend. Okay, at least every major peak by Bitcoin. To go briefly look, this peak by Bitcoin was in 2017. This one here was in early 2021, and then late 2021. This one was in 2013. If you go look at the NASDAQ, you can see that while it was in this bull market in 2013, so Bitcoin had one peak here. Bitcoin also had a peak in December of 2017, which was right here, and then Bitcoin also had a peak in March and April of 2021, which was here, and then it had another peak in November of 2021, which was here. So you can't realistically see a major mania phase by Bitcoin while the NASDAQ is in a downtrend, okay? So because the NASDAQ is in a downtrend right now, it makes no sense to assume that Bitcoin will sustainably go to higher prices. Therefore, you should assume that the bear case remains very real. Because of all of this, we need to keep a close eye on the NASDAQ. But remember, the NASDAQ's not likely going to do well until the Fed pivots. And the Fed won't pivot to becoming more dovish and being hawkish until inflation gets under control. And so, with all of this in mind, I think it makes sense to continue to play to be on defense. Additionally, the U.S. dollar currency index continues to rally. And remember, when the U.S. dollar currency index is going up, that typically corresponds to a Bitcoin bear market. When the dollar went up over here, you know that we're currently in a bear market. We also went up over here in 2014. We were in a bear market. When the dollar went up over here in 2018, Bitcoin was in a bear market. When the dollar goes down, like here in 2017 and in 2020, Bitcoin was in fact, a bull market. So I think when you look at all this stuff and sort of take it for what it is, we know that the dollar is in a parabolic uptrend, but the dollar could keep rallying for a while. For instance, if we look at, if we sort of zoom this thing out and look at maybe this uptrend channel here, the dollar could potentially go all the way up to over 112, 114, 115 before maybe finally moving back down. If you were to take a measured move on what happened in 2014 and then, just simply take this move here and overlay it on this one, you can kind of see that we might end up hitting a top later this year, which might correspond to a Bitcoin major market cycle bottom from where we can finally build out from. So I do think that there's a lot of confluence between the dollar going up, the NASDAQ going down, similarities between crypto and tech stocks back, 20 years ago, and saying we're already down 60-something% from the all-time high. We're already down 60-something% from the low that we put in, 64%. If we were to continue to go down, to say 500 billion, that would be another 50% drop. If it's say 600 billion, maybe another 45% drop. So a 600 billion would correspond to us, going back down to the bottom of this trend line sometime in, let's say, September or October. So I do hope this makes sense. I mean, I'm not trying to just spread unnecessary FUD, but the problem is that some things that have recently happened in the cryptocurrency asset class, like the stablecoin drama, with everything that's happened with Luna recently, and the fact that UST has been completely depegged, at least temporarily, for all we know. I don't know exactly what's going to happen there. I do think a lot of investors' confidence is going to be shaken for a while, and they will not be immediately returning until after regulations come. And there was actually an article that came out earlier talking about how stablecoin regulations are likely coming, and they should be implemented probably by the end of the year. Okay, if you actually go look at some of the articles on TradingView, you can actually see that. Let me see if I can find it. Here it is. In the face of Terra's UST depegging nightmare this week, the U.S. Treasury Secretary has labeled them significant risk, and they will have to be dealt with. And they're looking to have stablecoin legislation by the end of 2022. So, given all of that, given the fact that we are clearly in a bear market, clearly that there's stablecoin regulation coming, because there's going to be continued fear and FUD for several months to come, I think it makes sense to play defense, to remember cash is king, to remember that altcoins can have short-term bounces just like the NASDAQ had back in the year 2000 and even in sometime in 2020 or 2001, but that even these bounces don't necessarily mean anything until Bitcoin has actually put in a market cycle bottom. And I don't think that Bitcoin will put in a market cycle bottom until there's a little bit more evidence that markets are going back to being risk on. I know this is a lot to take in. I hope you enjoyed it. If you guys liked the content, we also have Into the Cryptoverse Premium, where we talk about more in-depth things as well. I put out tons of daily messages about where I see the asset class and give advice on what I see happening. And go check it out. We're having the sale, as I mentioned, into thecryptoverse.com. You can lock in the low rate as long as you do not cancel. You'll get access to the weekly reports that we put out. That we have 3 weekly videos. We actually do an AMA every week. I'm going to be doing that after sometime later today. And then we also have the website. You'll get access to on-chain charts. We have risk metrics. We have social statistics. We have the logarithmic regression stuff, the return on investment stuff. We have derivative charts, etc., and more. So check it out, into thecryptoverse.com. Hopefully you enjoyed this video on a worst case scenario for the cryptocurrency asset class bottoming. It could require another 40 to 50% correction eventually, but we likely would have short-term bounces along the way. And by the way, if we do go down below 20K, then it means we could probably bounce, though, off the 200-week moving average, and then maybe the bottom would actually end up being the 300-week. I don't know. But I think we'll go ahead and wrap it up there. If you're not subscribed, make sure you subscribe, give the video a thumbs up, and I'll see you next time. Bye.